Selling real estate in a self-directed IRA. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's video, I want to explain to you what you need to know when you sell real estate in a self-directed IRA. Well, let's start at the top. The advantage of using an IRA to buy real estate is generally when you sell it, there's no tax. That's known as tax deferral. Or if it's in a Roth IRA, it would be tax-free. Tax deferral means your money grows without tax. If you bought the real estate for $100,000 and sold it for $200,000, the $100,000 would not be subject to tax. That's known as tax deferral. So when you sell it, what do you need to keep in mind? Well, if you have a loan outstanding, so you can use leverage to buy real estate in an IRA. A couple things to keep in mind. Number one, loan must be non-recourse. You cannot personally guarantee the loan. But if the loan is outstanding or has been outstanding within 12 months of the sale of the real estate asset owned by the IRA could be subject to the UBTI tax if there's gains, and that tax can go as high as 37%. So something to obviously think about. If you have real estate and its leverage is associated with it, you're selling it, you want to start potentially thinking about the application of the maximum 37% UBTI tax. Number two, what happens when you sell it? So you're going to go to a closing, and generally there'll be all kinds of closing documents. A 1099-S will likely be filed by someone, and that will tell the IRS, hey, this LLC sold property, and here's the proceeds, and this is what happened. So how does the IRS know that the LLC is owned by an IRA? Well, a couple of ways. The tax ID number. If it's a single member LLC, you're going to use the tax ID number either of an IRA or the IRA custodian. If you're using a multiple member LLC, you're going to use the tax ID number of the multiple member LLC, and the K1s associated with that LLC will show the IRA as the partner. And if you're using an IRA directly to own real estate, then it will have its own tax ID number, and the IRS will clearly see that the owner of that real estate is a tax-exempt IRA. So that's how the IRA, or IRS, I should say, knows that when an IRA sells property, either directly or through an LLC, it should not be taxable. Good news is when you sell the real estate, either you use a title company or attorney at closing who will help you with all the paperwork. But from a tax standpoint, if there's no leverage, super clean, no tax. Reporting the 1099-S, the tax ID number on the 1099-S will let the IRS know that the IRA ultimately is the beneficial owner of that entity or real estate directly, and no tax will be due. If you have questions about setting up a self-directed IRA real estate, or just a few questions on what happens when you sell real estate in an IRA, give us a call. We literally wrote the book on the self-directed IRA.